less than 40, even if it's just by 2 days, then this video is definitely for you. Please stay tuned. Hi guys, welcome back to my channel. My name is Olubukola Akimolaya Okundele. I'm a registered nurse. I live and work in the UK. Just a quick disclaimer before we get into this. This is not a financial advice. Whatever you hear here, you want to make sure that you do your own findings. Go on Google, reach a financial advisor, make sure you get something, as an addition to this, and then make your own informed decision from there. So let's get quickly into it. I will be talking to you about the individual savings accounts today. I'm sure you've heard about it. So many people talk about ISA, LISA, and there are different types, and people are saying, which one are they talking about again? What does that one mean? And what is the money box? What's money box? And all of that. So that is what I will be touching base on quickly today. So let's get into it. So an individual savings account, that's the ISA account, is just a way to save money that is tax-free. Like I mentioned in my other video, please, if you haven't watched it, if you've got a little one who is below 18, please, that video is very essential. Just say quickly, whatever money you get that you've saved or it's been paid back to you, you'd agree with me that get taxed. Whether it is tax that got overtaken out of your account and they're trying to give it back to you, they will tax it. Whether it's your payroll that's underpaid you and they're trying to make up for the balance, it will get taxed. Whether it is pension that you're calling back for the first year of being with the pension scheme, it will get taxed. Everything gets taxed. But this money with the individual savings account is the only tax-free way to save in the UK. So I will get into it quickly because of our time. Right, there are so many types. I will be talking about them all, but laying great emphasis on just one of them so you can read on the others if you don't mind. Right, let's get into it quickly. Right, each tax year we all individually, of course, get an ISA allowance, which sets the maximum that we can save for that, tax-free bracket, if you get what I mean. So for this financial year 2022-2023, it is £20,000. You'll be like, £20,000, how much do I even earn to be able to save £20,000? Well, you will be surprised at the number of people who earn so much, whether in business, in their primary job, wherever it is, to be able to conveniently save £20,000 in 1 year. I mean, I have friends in the US who in just 3 months can save that. I mean, that's not the subject of this topic, so that's by the way. So just to tell you that indeed people have such money to save. So that's by the way quickly. So this £20,000, you can decide whether you want to save it in one type of ISA, as in one type of individual savings account, or you want to spread it across the types of savings accounts that we have, which I will mention in a bit. Just to mention quickly that any unused allowance for, say, this current financial year will not or cannot be carried over to the 2023-2024 financial year, as an example. Altogether, there are 5 types of ISA. Number 1, we have the cash ISA. With the cash ISA, you have to be 16 plus to be able to open it. The annual deposit, like I've mentioned earlier, is £20,000 for the cash ISA. There is no saving risk. The government doesn't add anything to you, and there is no withdrawal restriction, meaning if you want to withdraw whatever it is you've put on the cash ISA, you can't withdraw it except you're on some kind of fixed term or fixed agreement with whoever your provider is. So if you Google providers of cash ISA and you open an account with one of them, or you request to speak to an advisor and they put you through and you sign up with them, if you're not on a fixed rate, if you've put down 2.5 by March 31st next year and you want to take out your 2.5 back, whether it's come with interest or not, it is entirely up to you. So but the government normally doesn't add anything on top of this for you. So the other one to mention quickly, that's the other type of ISA that we have, is the stock and shares ISA. For you to be able to open the stock and shares ISA, you have to be 18 plus. With regard to your savings being at risk, I mean, just like any stock and shares, like I mentioned in the previous video, you can or you will expect that. But then if you wait with time, the same money that's seem as though you've lost can come back to you in multiple folds. That's just the way stock and shares work, I suppose. With regards to withdrawal restrictions, there are no withdrawal restrictions though you might incur charges withdrawing your stock or your shares out of a stock and share ISA. Is there any government bonus? Will the government add anything on top of that for you? The answer is no. So far so good. Do you think you'd want to do a cash ISA from what you've heard me say or what you've read on Google at the same time, or a stock and shares ISA? Would you? The third type is the innovative finance ISA, and it is when you lend your money out and get interest back in return. So when you Google innovative finance ISA providers, you will find people. You don't have to know the people that will use the money personally, but then of course you'd enter a contract where they'll tell you the all technical bits, and of course you'd read and do your own due diligence, and then decide to sign paperwork with them or not. So that is another one that people do a lot, and you have to be 18 plus to be able to sign up for this one. The maximum allowance that you can put into this one as well is £20,000. Is your savings at risk? As you would expect, yes, because whatever it is that you use your money to do could yield so much interest. What they've decided to give to you may be fixed, and it may be variable in the sense that it may be dependent on how much interest that they get. So that is you praying, oh God, let them get enough interest. So depending on what you've signed, what you've read, what you've agreed with them, to withdrawal of your savings, it is very dependent. So you won't speak to them and ask them that questions about can you withdraw your cash or your fund at whatever time you want. Now, does the government add any money for you for this innovative finance ISA? The answer is no. They call it IFISA, 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 in case you come across it. The fourth one is the junior ISA that I've spoken extensively about in my previous video. And with junior ISA, you have to be 0 to 17 years to be able to open one. And like I said in my other video, you have to open it for your child who is 0 to 16 years. Once they clock 16, they are then able to manage the account themselves, but they can't withdraw the money until they're 18. But for a child 16 or 17, they can open their accounts right themselves. You don't have to be the one to open it for them. However, the annual deposit limit for this category of ISA is £9,000, like you will find that I mentioned in the other video. Savings at risk depends, and the only reason it is variable is because if you go for the cash ISA, for the junior one, then of course there is no risk. However, if you go for the stock and share, there is a risk, like you'd expect for every stock and share. I mean, life itself is a risk. Is there a withdrawal restriction with junior ISA? Yes, there is. The child has to be 18 before the child can withdraw the money out. And does the government add any bonus on top of this money? The answer is no, the government doesn't. The fifth, which is the last but not the least, which is the one I will be dwelling so much on top on, is the lifetime ISA. LISA, the one you've been hearing about so much. This is the one I'll be dwelling upon the most. So for this one, to be able to open a lifetime ISA, which is what I know many people open, you have to be between 18 and 39. It means you are 39 years plus 362 days. You can quickly open it before you hit 365 days and you clock 40. So that is the lifetime ISA. Now with that one, there is a time when you can withdraw. So with that one, there is a cap. However, you know how we've been having £20,000 as the allowance, £20,000. This one is surprisingly £4,000 as the maximum that you can put in as per your annual deposit limit. Now with regards to the savings at risk, now your savings could be at risk if you go for the lifetime LISA for stock and shares, just as we have junior cash ISA and we have junior stock and shares ISA. We also have LISA cash and LISA stock and shares. So if you go for the stock and shares, just like everything in life, there are times when your stock would crash and times it would pick up so much you'll be surprised. Now, so that makes the risk a bit variable. And with government bonus, yes, the government adds money for you in this one, and it is 25% of everything that you have in that account. Now with regards to withdrawal restriction, the restriction is there because you cannot call out the fund in your LISA until you clock 60. Right, the lifetime ISA has a 25% boost if you're saving for your first home or you're saving towards retirement. So apart from your NHS pension or private pension, whatever scheme you're with, towards saving for your future, your LISA could also help you to save towards your future. Right, because I've talked about the types of ISAs, I'd love to dedicate the LISA as a whole video on its own. So please click on the next video just below. It's just a way to make sure that things are well segmentalized and all of that on my channel, not because of anything else. Please click in the next video down below to watch the Lisa, all you need to know about it. Please, thank you very much.